We are back with Kevin Robinson and Ryan Dodson answering your questions, all tax-related questions. All right, so this first question is, my only income is Social Security, and I had to sell my $16,000 stock account in 2023 to pay for funeral expenses. Do I have to file taxes? Ryan?
Yes, you do need to file taxes because you're going to need to report the gain or loss that you have on those stock sales. If you do not file taxes, the government will be very happy to send you a letter saying, hey, we're going to assume this all of your stock sales was at 100% gain. And because of that dollar amount, and depending upon how much you have in Social Security, it could cause some of your Social Security to be taxable. So my best advice is yes, do file and claim those stock sales.
Claim those stock sales. Okay. Kevin, this person says, do you need to pay taxes on Social Security and a pension? Together, they both add up to about $18,000.
It generally would depend really on their filing status, Tanya. I think typically I would probably say I would at least try to go ahead and do it for 2023 to make sure. And if it stays about the same each year and there's no tax liability from 2023 year, then maybe not. But I think be on the safe side, I would, just to make sure. But there's a $25,000 threshold for Social Security to be taxable for a single person, and married couples 32. So I'd probably make sure at least that not to miss that. And then, as Ryan talked about, get a letter from the IRS saying, why didn't you file?
Yeah, and folks, you can file for free. When you're talking about $18,000 earned income, you can file for free if you make $79,000 and less. So, I mean, there's no reason why you can't file that and follow all the prompts and do that kind of thing. All right, hey, Ryan, this person says, what situation does a retired person not have to file taxes or have to file taxes? It doesn't have anything to do with whether you're retired or how old you are.
No, it has to do with how much income you have at the end of the day. If your income is under the standard deduction, in general, you're not required to file. And that's the big question at the end of the day. So sometimes if folks have just Social Security and only Social Security and absolutely nothing else, you're not required to file a tax return.
I guess that's why they say death and taxes, right, are the only two things, because you don't age out of paying taxes.
Correct. Just income out of it.
Just income out of it. Okay. Speaking of, Kevin, this person is saying, I've got a heating and air unit put in, and it was through my home warranty company. Can you use the amount you had to pay for that on your taxes?
Typically, I mean, if it meets the Energy Star requirements and so forth, then I would have it put on the taxes, for that. And again, that's meeting the Energy Star requirement. Look up EnergyStar.gov and just to make sure they got the correct paperwork for their taxes.
Okay, and then a follow-up question was, we had to buy a new heating and air unit. Can that be a deduction? It can, but again, it has to have that Energy Star.
Right. There should be paperwork that the contractor installing it should give the person, and if they want to look it up online for their own records, and then just know that there are limits on those heating units of what can be claimed. You can't claim the whole, say, $5,000 or $10,000 you're paying, but you can claim up to the IRS limits on it for what qualifies.
Okay. Ryan, this question is, I've been a homeowner for over 4 years now. Is there something that I should claim on my taxes? The home was left to me when my mom passed away.
So the most common thing that folks are going to get when they have a home is going to be property taxes. You can deduct your property taxes on your home. If by chance you have a mortgage, and of course you can get the mortgage interest. Those are the two main things that are available to folks.
Okay. Kevin, this person's saying, can you claim the child tax credit with no earned income? Don't you need some kind of like $2,500 income minimum?
You've got to have it basically an earned income for the tax credit. Bear in mind the credits go against the income tax liability, which is deriving from income.
Okay, so is there a dollar amount then? Because that sounded confusing.
I'm thinking it's somewhere around 2,500 or more, given, I know we were talking about it earlier, so yes.
Okay, all right. And Ryan, quickly before we had to break, do you have to itemize in order to receive a tax credit, like a child tax credit, an energy tax credit?
No, you don't. You can get a tax credit on your tax return even if you don't itemize your taxes. And so a tax credit is going to offset any tax liability that you have. A deduction is basically going to decrease the amount of taxable income that you have. So the vast majority of Americans get credits without any tax deductions.
Okay, that's good to know. All right, we're going to take a quick break. We're taking more of your questions when we come back.